Just because it's crypto doesn't mean you don't need revenues. It comes down again where Ethereum really becomes valuable again is when the applications are there. I still think Doge has got more applications potentially available to it than Cardano. You know, the beauty of crypto is that it can make a business better.
All right. Welcome back, everybody, to Altcoin Daily. My name's Austin with my twin brother, Aaron, and billionaire Mark Cuban. Thank you for being here.
My pleasure. Sorry, I don't know why it's so dark. Got lots of light coming in, so I apologize for that.
It's cool. It's cool. We'll be here as the sun shifts around you. Hey, let's just jump right in. I know you're a big cryptocurrency advocate. You've been in this space since at least the 2017 run-up. What's your why, Mark? Like, why does cryptocurrency excite you?
I'm always into tech. I'm always looking for new opportunities, and I always look for new ways to do business. I'm an entrepreneur. And so, you know, when you dig in on crypto, like all new technologies, I mean, just to give you some background for point of reference, you know, we started a company in 1994 called AudioNet, which was the first streaming company, first commercial streaming company, let's say. And then in 2000, you know, so we looked at new applications for using the internet, right? That was when the internet was just getting started. And then in 2000, I started the first all high definition TV network. And so I'm always looking for new ways to use technology in new ways. And so when crypto started to happen, I'd always paid attention and wasn't as excited about it as a currency, but saw unique applications. And what really got me grooving on it was in 2020, when I started just trying to get updated on NFTs and started to really dig in and more importantly, understand what smart contracts are about. Because the beauty of NFTs wasn't the NFT itself, it was the fact that it was an application using smart contracts and what else could smart contracts be used for. And then you start digging into the decentralization side of it. And I'm not one of these guys, oh, it's all about decentralization for the trilemma and all that kind of stuff. I saw it more as a way to create new ways of doing business. And so that's really what I look for, you know, because when you find new ways of doing business, you find ways to disrupt existing businesses.
Basically, eliminate the middleman with smart contracts.
Well, it's not even just about eliminating the middleman. It's just, you know, what can you do that's different that disrupts an industry that's always been doing it the same way? That's what I look for in everything and anything.
What's your thoughts on the current macro environment? Does that concern you?
It's not, yes, it does concern me, but it doesn't diminish my bullishness on crypto. You know, if you go back over the last few years, you know, let's just go back 2020, we saw the DeFi summer, and that brought a lot of new people in, and it created a lot of applications that, particularly for Ethereum and some L2s, that really got people involved and brought people to the table for Ethereum in particular. And those applications make total sense. You know, you go on Aave and you put some money in, you deposit, you borrow, it takes 30 seconds. You know, you need to pull out some USDC to go pay a credit card bill. Now you can do that, right? So DeFi went from being something new that brought a lot of people in. People were using their stimulus checks. Rates were really high back then. You could yield farm, and it was crazy as everybody was figuring it out. You had a lot of investor money coming in, subsidizing yields, and so you really had you had this groundswell of people coming to crypto, and that was great. It was a unique application that really put people to work. Then you saw the same thing with NFTs. People started collecting them, whether it was on Flow with Top Shot, or it was on Ethereum with, you know, punks or whatever, you know, Bored Apes, whatever it may be, and everything and anything was being created and everything sold at the beginning, right? But, you know, and that brought in a ton of people, still brought in a ton of people. So you had NFTs as a cool application that led to utilization. Because the thing about crypto that I think people sometimes fail to realize is you need users in order for people to buy and use the Ethereum or whatever it may be, right, to generate gas fees. Because if gas fees aren't being generated or application fees aren't being generated, there's no real business there. And at the end of the day, it's still a real business that has to sustain itself. And so that got me in again. But then, you know, as the speculation started to dry up and prices dropped, you saw the people who were just in it for the speculation leave. And when they left, you know, we've seen prices drop significantly, and, you know, they've popped up some recently. Who knows if that's just a, you know, a bear market rebound and it's just temporary? I don't know. You know, you can only guess. But what concerns me is the fact that there's not the next application, right? We went from DeFi to collectibles. Now what? And rather than seeing true innovation, you're seeing replication, where, okay, I'm moving DeFi to this blockchain or that blockchain. Oh, I'm trying to find value on the edges. I'm going to create an AI-based application that looks for the best yields across all the different DeFi platforms, and I'm going to automate that for people. You know, it's not something that is groundbreaking. It's just an improvement on what's already being done, and that's not going to be enough to bring people back to crypto. So, you know, it really is going to take that next big thing to really drive utilization. So that's my concern, you know, and, you know, I've said this before, we saw the same thing with the internet, you know, streaming, bam, it's fun. New websites, bam, it's fun. Amazon, you're buying, bam, it's fun. And then, you know, everything kind of cratered in 2000 and 2001, and there were no BAMs for a long time. You know, there wasn't shit happening for a few years. And then, you know, in 2004, you saw Facebook and social networks hit, and then you saw app stores hit, you know, when in 2007, when the iPhone came out. So we're looking for that App Store iPhone, you know, platforming moment where there's new applications that bring in a lot of non-traditional crypto users. Because, you know, the thing that's going to drive crypto above and beyond just the cryptoites is something where you just have to use it. You know, you just need to use it. Like, you know, I'll use the App Store again as an example, whether it's, you know, Play Store on Android or iOS App Store. You know, someone posted something on Twitter that was great. One of the top 10 applications was just an app that made it look like you're drinking a beer, you know, or you had Angry Birds. That wasn't enough to make you go buy an iPhone. But as people started buying iPhones and the foundation was there, it became an ecosystem where it made sense for people to invest a lot of money in apps. And what happened? Everybody created an app, right? There were zillions of them, right? And 99.99% of them failed. But there were the few of them, the Instagrams, the Snapchats, etc., where it said, okay, you know, this is why I need a smartphone. I need that camera. I need to be able to use this app. Crypto has not had that moment yet where it's your grandma, your little brother, your little sister, all have to use it for different reasons maybe, but they need to use crypto because that's how they get access to the applications that they really want to have and want to use every single day.
Twitter Spaces was the app that almost made me buy an iPhone because I'm an Android guy and I kept getting booted off the Spaces, but still an Android guy.
I use both. I have one of each because I want to learn.
Yeah, yeah. But I liked where you were going with that because, you know, just thinking about the next big opportunity in the cryptocurrency space. And to your credit, you were around for DeFi summer. DeFi was a big opportunity in 2020. You were early in saying Ethereum and NFTs is, you know, possibly going to be really big. And it was really big. After cryptocurrency finds a bottom, do you have any thoughts about the next big opportunity in the space?
It just comes down to applications. If you guys got great ideas, I'm wide open, right? I'm tired of the bullshit pitches I'm getting, like new DeFi for new, you know, there's a great analogy between what happened in Silicon Valley with SaaS software and other applications, even like Uber, right? Where tons of money came in and subsidized all these apps. Uber is just now starting to make money 15 years, whatever it is, 12 years later. You know, there's other apps that same thing. And so what happened with apps, like I was an investor in Box, and I actually wanted them to just generate revenue as opposed to raise money to subsidize free online storage. And so They went in their way, they bought me out, and it took them, I don't even know how many years for them to make money. I'm never a big fan of raising hundreds of millions of dollars to do tens of millions in business, but that's exactly what happened in crypto. But crypto was distorted because people looked at the token valuations. And so what would happen is they'd go out and do a token sale and generate a bunch of capital, or even worse, they'd raise hundreds of millions of dollars from VCs and use that money to create a fake yield, right? We saw that with Anchor, right? Where it was like, okay, we're offering you 20%. And then they hope that they'd be able to generate enough loans to cover the 20%. Never came close. All that yield was subsidized. All those 5, 7, 8, 10, 20, 50, 90, 100% yields have always been subsidized by investors. Now with those investors not willing to subsidize anymore, you're not seeing the crazy yields. And you're not even seeing the inflationary yields from the blockchains anymore. You know, where you would say, okay, you know, if you stake this, we're going to pay you 4% or 8% or 12%. And they can't even afford to do that because, you know, if you inflate too much, there's not enough intrinsic demand to cover that inflation, and your token price is going to drop. And that makes your investors mad. That makes your speculators mad. And it ignores the fact that to be a real business, you have to be a real business. And crypto doesn't change any of that.
Talked about Uber. I'm glad Chris Sacca's company is finally in profit, because it is a good service.
That's my big miss. You know, he came, Travis came to me first, and I told him, you know, I love the idea, but you're going to just get crushed by all the taxi cab commissions, this and that. He didn't care, right? He was like, well, fuck that. I don't care. I'll do it my own way, and never came back to me. So that was my big miss, and Sacca never lets me forget it. So.
Well, he needs to talk to Damon to update that wardrobe, because I don't know.
That wardrobe was awful, but I was mad, bro. I was like, you let Sacca not wear a suit? Because when I first came on the show, I was like, I don't want to wear a suit. I never wear a suit. And they, you know, I caved, and I was so pissed when Sacca came on.
And you took away that 5% equity for Shark Tank. We're big fans of Shark Tank.
I appreciate that.
Yeah. All right, let's get into specific protocols. You were early in saying Ethereum has value despite all the maxis coming at you. Ethereum today going through a huge change, coming up sooner rather than later. The merge.
The merge.
What are your thoughts on the merge?
It's interesting. Obviously, it's great to go proof of stake from proof of work, right? For all the environmental reasons. Then with 1559, you're going to potentially have deflation, right? So that brings up an interesting corollary. Inflation versus utilization, because as utilization goes up and the value of a token goes up, then the cost to do something goes up. And so you have these two competing interests. Hey, I want to create an app that generates 1 million NFTs a day, right? Just picking something out of left field, right? I'm not saying there is one. Well, if the value of Ethereum keeps on going up because there's a deflationary spiral going on because of 1559, now all of a sudden, where's the equilibrium? And then there's the question of all the stakers with staking ETH, right? With, you know, now there it's staged on when they can get out, but will they? And how quickly? And what happens to the staked ETH, you know, along that period of time, and what does that do for the pricing? So there's a lot of uncertainty, and you're seeing a lot of people speculating by buying call options, right? The option rate versus Bitcoin is through the roof. So it remains to be seen, but it's hard. It's going to be really hard to determine, right? And so, you know, and I don't, maybe you guys know the answer. Will gas calculations change, under proof of stake, right, versus what they were under proof of work, to even out, so that I have some level of consistency on what my expectations are for being an NFT business, or, you know, whatever business, you know, DeFi, whatever it may be that I'm trying to do. You know, do you guys know what happens to gas fees at that point in time, or is it still pretty much the same formula?
I'm not exactly sure. I know that, you know, the misinformation is that gas fees are going to go down, but that's not really going to happen until more layer twos and different things are added. But as far as like evening out and being more stable, I'm not sure.
Yeah, because you see what I'm saying, right? If all of a sudden the price goes through the roof, like you saw that before, when you talk about high gas fees, it's a function of the price of Ethereum.
Totally. So it sounds to me like you think the merge is a good move, but it might be a sell the news event.
It might be a what event?
A sell the news event.
That I don't know. I don't know. It comes down again where Ethereum really becomes valuable again is when the applications are there. Because if you think about it, you know, there's no deflation if there's no applications use. Because 1559, it requires applications, and just buying Ethereum from somebody doesn't generate any of that.
So,
right?
yeah. So let's say if successful, where do you see Ethereum as this global computer, like in 10 years, you know, versus with the Googles and with the Amazons taking over, working beside?
Depends on the applications. If there's a better search engine that's on Ethereum, whoever creates it gets it.
Hey, who's a bigger whale in Polygon? You or Mr. Wonderful?
I don't even know. Does Kevin actually? Kevin, I have no idea. You know, Kevin and I, we just were shooting Shark Tank 2 weeks ago, actually, and didn't even come up. Did not even come up. He thinks he knows about it, but he probably doesn't understand anything I just said.
You were first. You were first in the crypto sphere. Hey, another popular protocol that I see people talking about on Twitter all the time is Cardano. What are your thoughts on Cardano?
You know, my thoughts on Cardano are the exact same as they are on Polygon and Ethereum. You know, business walks and bull. It's just, there's got to be a there, right? And you can go to Coin Metrics, you can go to all these different places and look for transactions. And I guess the people in Africa are not using it as much as they expected to, because you don't see the transactions, you don't see the fees, you know, and the crypto, you know, I use cryptofees.info a lot, right? Just to get a sense of what's going on. It's just quick and easy. But I look at number of transactions, and to me, that's the bellwether of success. And, you know, now they can be distorted, and you've got to smooth it out because somebody comes in for a play to earn game. And let's talk about play to earn too at some point, because that's important right now. Because I think that's completely misunderstood and misapplied. But if someone comes in with one application, like on Polygon, you know, some play to earn games came in and they were subsidized by investors. Everybody dove in to try to get some of that money, and then they dove right back out. And so, you know, smoothing it out, I just don't see where Cardano has had much of an impact at all. You know, they got their smart contracts, what, a year ago, and that was going to be the inflection point. Inflect away, Cardano, you know, I just have not seen it. Now, that doesn't mean, look, you know, I talked about it for Ethereum, for Polygon. If the next great application that everybody wants to use is on Cardano and you have to buy ADA, go, you know, that's great, right? The door is open for that to happen, but it hasn't happened yet.
And then just finishing up on Cardano, Charles Hoskinson just recently spoke on regulations in front of Congress. If Charles Hoskinson was on Shark Tank, what advice would you give him for the Cardano project?
I'd say, where's your revenues? Just because it's crypto doesn't mean you don't need revenues. You know, there's this distortion in crypto called market cap. You know, you have a small, and it happens with some small stocks too. You have a small float, you get the price up enough, and you have, you know, a total number available from the treasury at $1 billion, and you make it a $10 token, and now you have a $10 billion total market cap. You know, now that's not a Cardano issue, but, you know, if you do enough staking and you have enough inflation and you can stake enough that people don't sell too much, you're going to have, a big enough market cap to make it look good. Dogecoin's got a huge market cap. Shiba Inu's got a huge market cap. But there's no, I still think Doge has got more applications potentially available to it than Cardano. Now that'll be out there for sure, but that'll be your headline. But the opportunity for Cardano is greater until Doge really becomes a platform for applications. But you get my point, right? It still comes down, it's still a business. No matter what you do, no matter what you say, no matter how you position it, no matter what your market cap is, there has to be some there. And that's why Cardano, push for smart contracts, I'm guessing. That's why schools in Africa need Cardano, but it's just not there yet.
What excites you about play to earn? I know you were an investor in Axie.
Yeah. So play to earn typically is subsidized, right? So with Axie, they were smart, they were first, and they had a huge sponsor base where they went out there and got groups to sponsor people left and right. And it just blew up, right? And why wouldn't it blow up? It's free money. It's going back to the old Silicon Valley way for software. We'll subsidize the cost for you. We'll subsidize the cost of bandwidth or storage, whatever it is, to get you to use it and view it as a marketing cost. But it's still a traditional ecosystem where either you subsidize it or you generate revenues to buy the tokens that are being created. And if you don't generate revenues to buy the tokens, either you have to have new subsidies continually coming in, or you have to have new players coming in to subsidize the existing players. And the minute the musical chairs stop, it collapses unless you have an ecosystem there, an economy there that can continue to buy the tokens to make it worthwhile for people to play if they're playing for some reason other than the fact they just love the game. And so what I had recommended to them back when they had a maximum number of players was now's the time to sell NFTs to people outside, not to the players themselves, but to people outside. Somebody in the Philippines who's playing this game, just generated this NFT that they using their artwork that they're selling for SLP, right? And then they can sell that and that generates revenue, or Axie can do the same thing, create NFTs based off the play, the best plays ever, and then people outside can buy those. You take that revenue that comes in and you use that to buy the SLP and the Axie tokens. Or you go to Coca-Cola or whoever and say, we've got X number of people, here's a demographic breakdown, here's a geographic breakdown, advertise, and we'll slip in just like they do in video games, right? Here's this sponsor, here's that. And because we have millions of users around the world, we're going to charge you $3 million and we're going to take 75% of that. 25% goes into our treasury for operations and 75% goes to buy SLP and Axie, which creates a virtuous cycle, which means there's always going to be a foundation for pricing as long as you have players, right? That makes it more sustainable. Without that sustainability and ecosystem, it just doesn't work. So whenever somebody comes to me with a play to earn, I always ask them the exact same question. All right, the player comes in, they earn your equivalent of SLP, right? Whatever you call it, gameplay token. Now they're ready to sell it. Why would somebody buy it?
To be used in the game, they have to.
Yeah, so but that means it's only available to players, right? And players can just buy it originally right from the game itself. So there's got to be a reason for somebody to buy it, and it applies to for everything. Play to work to earn, learn to earn, whatever it is. If even NFT sales, right? So with the Mavericks, we give away a free NFT when you show up at a game. We don't sell it, we give it away. Now other teams, and then there's the community tokens, the socios, the chilies, etc., where they're selling them. And I always ask the same question: why would somebody buy that from somebody else? If you collect it, great. There's a reason there, right? If there's some utility, great. But if it's just, a play to earn token from somebody, There's no reason for them to buy it. You always have to ask yourself, what is the reason that a second, third, fourth level buyer will buy? Otherwise, it's going to die.
And that was interesting what you said. One way to solve the subsidy problem that eventually dries up is to bring in outside sponsors like Coca-Cola, and then they could be providing value and get advertising.
Yeah, because they want the advertising. They want, if they're trying to sell Coca-Cola in the Philippines, they've got people who with money readily expensive. When we started AudioNet way back when in the early days of the internet, one of the key selling points that I always used is, you don't have to send people other places to buy. Like before the internet, you had to go to the store, right? And you went to a Sears catalog. I'm dating myself, right?
I don't know. You tell me.
What's that?
I don't know. You tell me.
Yeah. And that shit had to be delivered. Well, once the internet hit, you can be listening to a baseball game, and as long as there's a link to buy whatever it is they're pitching right there, you just ordered it. And it's the same now with Web3, but nobody does that, right? You don't realize that if someone's playing a game and there's an ad for Coke, and Coke's a bad example, a digital product is something better, a movie, and it's a movie to own, right? Or music to own as a download. It doesn't happen very often, but just it's a simple example, right? And then you just click it, and it just clicks off, one Axie token, and it's to deliver to you immediately. Now you're making some money, and that subsidizes and plays the game. And so if your play to earn doesn't have a way to generate revenue outside just the tokens, you're fucked.
Mark, what's your take on the SEC versus Ripple?
I haven't paid a whole lot of attention. I've intentionally avoided it because all the Rippleites or whatever they call themselves just go nuts. So the minute I say something, then it just turns into my timeline gets destroyed on Twitter. So, but I can talk generally about the SEC all day long.
Yeah, because it's kind of like, even if Ripple wins, it's like Ripple's not in the conversation.
No, and it's already too late, right? Because they've gone back and forth, and it's a different battle than the general issue of how the SEC deals with crypto.
Mm-hmm. But yeah, still, if Ripple wins, I mean, generally that could be seen as definitely positive for crypto versus a loss. But just the SEC in general, yeah, talk about that. They seem to really verbally be wanting. Yeah, go ahead.
SEC is incredibly hypocritical. They talk about trying to protect investors. Do you guys know what the pink sheets are?
Like a car?
No, not for a car. Pink sheets are little public equities stocks that don't trade on the big exchanges like the NASDAQ or the New York.
Like the penny stocks.
Penny stocks, but penny stocks can be different types. There's over-the-counter penny stocks, and there's pink sheet penny stocks, and they're not necessarily all penny stocks. They can be big companies. Like what was the coffee company out of China that turned into a scam, Luckin Coffee or whatever. But anyways, they trade over there too. Well, I just looked at this yesterday or 2 days ago because someone asked me. There are 16,750 pink sheet stocks. Probably about the number of tokens there are, probably, right? There is no protection for anybody anywhere coming from the SEC, and that already falls under their purview, right? They're supposed to be protecting you. There are funds, ETFs and others that incorporate stocks from countries that have no SEC-like protections at all. They don't care. You can still buy them and sell them, right? There are companies that are bought and sold on big exchanges that have no audit rights whatsoever. You don't have any idea if the numbers are accurate. And so when the SEC comes in and says they want to protect investors from crypto, they're not even doing their job with what the area they're supposed to do their job. And then you've got the issue of their approach to trying to figure it out. The SEC does this thing called regulation through litigation, meaning they don't come out and say, here's the rules that we want everybody to follow. Give us your comments. They do what they did with Coinbase. They sue, right? And they'll sue you. And their hope is that the result of the lawsuit then turns into precedent that they're able to use to enforce the way they want to enforce it. It's not like someone today could just call the SEC and say, okay, we want to issue a token. We have this, crypto business. Tell us what we need to do. There's just no way. And so as a result, there's all this uncertainty, which is why you see more crypto companies in Singapore and the Bahamas and the British Virgin Islands, in Caymans, all these different places. And people are afraid to do anything here. And now you look at the big companies like Coinbase who create jobs and are trying to do it right. They're getting fucked over. And so there was, I forget which politician that said we should do it through the CFTC instead of the SEC. And they're right. Because the SEC, they care more about hiring more lawyers than getting it done the right way.
I hear all the time that, hey, big money really won't enter crypto until we get some regulatory clarity. Is that what you hear in your rooms?
Of course, because it's all uncertainty. And, there's the security aspect of it. And we see what's happening every day. There's a hack somewhere. And to me, it's unfortunate. Obviously, you don't want to be the person losing money. But again, it's no different than the early days of the internet. You got to remember that there was a time when people said, don't use Amazon because your credit card is going to get hacked. Don't do any buying on the internet because you're putting at risk your credit card. So it's part of the learning curve. And every time people get smarter and they learn from experience, it's just because of the scale already of crypto, it can be expensive and unfortunate.
Recent headline we saw is Michael Saylor stepped down from CEO to take an executive position to focus on Bitcoin. Do you think that story we're getting is truly face value what happened? Do you think he was pushed out? Do you think he chose to?
I have no idea, and I really don't care. I don't think it changes anything for anything.
Right. One Bitcoin still worth one Bitcoin.
Yeah.
Mark Cuban, what's the metaverse?
The metaverse is anything you want it to be. This is the metaverse. We are in the metaverse right now as we speak. Unfortunately, I'm in the down under metaverse and it's dark down here. Vecna has its own metaverse. It's just everybody, you put people that focus on VR want that to be the metaverse, right? People want Web3 to be the metaverse. Anytime you have more than one person together, there's no rhyme or reason to it yet. Now, will there be? I don't think it's going to be hard to standardize things and to make it interoperable, at least for the foreseeable future. And so, I think metaverse is just like a Zoom, just like this, right? Only whatever platform you choose to aggregate people. And then you hope that grows into community. And I think probably the greatest takeaway now that I think about it, if you look across just general business and you look across crypto, Web3, if you want to call it that, metaverse, it all comes down to community. Where can you create community and what's the impact of that community? Your community might be, you guys and your organization, the people you bring in, right? It could be the community for the Dallas Mavericks. It could be just community within VR using an avatar. There's 1,000 ways to create community, and technology is going to have a growing impact on that community. Whichever platforms make the strongest communities will be one type of metaverse. The communities, whichever platform creates the largest community will have another type of metaverse, if you will. And so it won't be just one size fits all. There'll be a lot of different applications and a lot of ways of defining the metaverse. But right now it's more talk than anything.
Yeah, metaverse, kind of like the term cyberspace in the 90s.
Yeah, well, that's exactly right. It's cyberspace, and the worst part is people are buying real estate in these places. I mean, that's just the dumbest shit ever. The dumbest. Did I say it was dumb? No, that's not strong enough. Super meta, immaculately dumb. It's just like if, it's not even as good as a URL or, an ENS, because there's unlimited volumes that you can create. Now, after you create a community, not before, but after you create a community, then you can find places, depending on how that community works, that can have perceived value because of access or whatever, right? But beforehand, based off of a traditional real estate model, dumbest motherfucking shit ever.
So I don't want to put words in your mouth, but based off that, just two random examples, you would say the other side metaverse, because it started with community with the Bored Apes, would be better than like the Sandbox who's just trying to sell the land.
Look, I'm an investor when you go through those guys, right? And I still thought it was dumb to do the real estate. Now, it was great money for them, right? You know, but that wasn't based off of utility. Now, what Yugo's done or is doing that is smart, they're, you know, they're calling it real estate, but really it's just a token for access. It's just marketing nomenclature, basically. Now, maybe they'll be able to build it to turn into other things, but you've got to have a community first. And then again, it's just gated access, if you will, as opposed to an address.
I want to finish this out with a few big picture questions, but actually we get to those. One last question on specific protocols. I know that you're an investor in Aave or Injective. Are you still bullish on those? Are they still blue chip projects in your opinion?
Yeah, I'm not an investor in Aave. He ghosted me, actually. We talked about it. He ghosted me, but I still like Injective. I still think perpetuals have a real opportunity. It's not an easy business, but they have a chance.
That's from what I looked on your website, you list all your crypto companies. Injective seems to be the lowest cap one in your portfolio. Is there another low cap altcoin that's just on your radar that you find value in?
Low cap altcoin. I mean, I'm a fan of Klima, Klima DAO, right? Which used to be high cap. Now it's about a $30 million market cap. One of the applications that I think will work, or I hope will work, and I'll take a step back to explain why. Like a couple of years ago, I went and bought some carbon offsets because I wanted to offset my personal and corporate carbon footprint. And it's a pain in the ass to go and do that, right? You have to go through a broker. You don't know what's real or not real. There is no real blockchain type scenario to verify everything that's easy. And then Klima came along and I invested purely because I think it's easier right now as we speak to buy a Klima token, an MCO token, a BCT token, and burn it and take the treasury back out, you know, and take that as an offset, right? And they make it easy to do. You know, now you can look at it as an investment and there's upside to it if this happens a lot. But the worst case, which is the way I also try to look at things, is worst case is I just burn them, and based off their treasury that I've burned, I've offset X amount of tons of carbon. And to me, that's a win no matter how you look at it. And so they're still early in the game. They've you know, made some missteps, but I think that they've really gotten their act together. Like Polygon came in and bought a bunch, and as a result, you know, offset their footprint for their proof of stake network. And I think more and more companies will do that. And so that's a low market cap one that I like. Excuse me, KLIMA. What was the other one I have? Wait here, I'll tell you real quick. Give me
Nice.
NX. Oh, this is wrong. Anyways, doesn't matter.
I was interested.
Now you're interested, Alan. Okay, let me see if I can find it. There we go, MATIC, Klima. I own Klima, I own Ape, I own some BLT, Blockdo, because it's wallets for Flow, Injective, Aletha, which is the integrating artificial intelligence to NFTs. So that's probably the other one. And I like Ocean as well. And so, you know, the Aletha, if you can start integrating AI into NFTs and are able to create some virtual humans, if you will, that have different properties, and that expands, and you can have some fun with that and unique applications. And then Ocean, you know, for packaging data and buying and reselling it, so that there's ongoing rewards to the people who originate the data. They haven't really executed as well as I would have liked, but that's the concept.
I only have one more question. Maybe Aaron has another question, but Mark, something that I like on Shark Tank or just in your investments that you'll say, oh, I missed out on Uber, or this has been my most successful Shark Tank investment. So in the crypto world, what's been your most successful crypto investment? And then what's one that you heard about, but you didn't invest and you missed out on?
ETH has been my most successful by far, with Bitcoin right behind. I did really well with Helium, but I sold right at the top. I got lucky, you know. And in terms of one I missed out on, none that I really wish, you know, because I got in early enough that a lot of them were really cheap. I could take flyers, you know, buying Polygon at under a penny, you know, those types of things. So there hasn't really been one that I've truly missed out. Now I've timed some of them wrong. I lightened up on a bunch of stuff and on Ethereum and Bitcoin. So I lightened up, and some I got out really well, and some I sold lower than where it is now, but that's okay. You can't time it always.
Mark, one of my final questions, big picture type question, and please take some time with this. This is the kind of alpha our audience wants to know.
Okay.
Expose the cryptocurrency market. What don't average people know that you know as a multi-decade investor?
Well, I'll do this. Like if I was explaining it to Bill Gates, right, who dismisses it and is a tech guy, I think the token side is all noise. The price of tokens are noise. That has nothing to do with the foundational value of crypto. Put aside Bitcoin. Bitcoin's store of value, right? You can argue about Lightning and all this stuff the Maxis argue, but it's not really an extensible platform. It's not extensible enough to build applications on yet. Which is a whole nother question. If you can, you know, if you're willing to change it, you know, that creates all kinds of other questions about Bitcoin and what the Maxis think. But I think what really comes to play for me is the idea of distributed applications driven by smart contracts. So I mentioned being able to use, you know, to create carbon offsets. So the question, you know, somebody like Bill would come back and say is, well, why not? Why do I need tokens? Why does that matter, right? Why don't I just create something that's easy to buy, you know, a certificate? Well, the difference is the standards that are in place so that royalties or storage or exploring, you know, those things aren't necessarily available through traditional database applications. I mean, I spent 8 years, my first company, that's all I wrote was, you know, distributed database applications. And so I think there's a huge advantage there. I think DAOs also have a unique opportunity, not so much because everybody gets to vote, but more because it forces organizations to structure themselves differently. An organization that is vertical is always going to have a hard time overcoming its hierarchy. Whereas a DAO is vertical at some levels, but it's still smushed vertical, right? So that the people who start the DAO control everything, no matter how much you want to lie to yourself about how open-ended it is, right? But at the same time, as it starts to evolve and new things come in, there's a voice to the token holders that isn't available in a traditional organization. And there's not the standard hierarchy, if it's done right, that is typical to an organization. And so getting rid of that hierarchy that traditional corporations have is a huge step forward for a lot of different types of companies. And then I think there's different ways to use crypto in applications that the distribution can play a major part. So if you look at insurance claims, medical insurance claims, right? And so if you were to create an environment where you have, what's the right word? 10,000 hosts, not hosts, but
Nodes.
Nodes, yeah. So I have 10,000 nodes and I train them, right? So you have to put up X number of tokens worth 10,000 or 20,000, something very material, right? Where not anybody's going to be able to do it. And you have to go through this training before you're able to do this, where you have to learn all the rules for approving or disapproving a medical claim. And for some, it might be after the fact. For others, it might be pre-approvals. And there's 10,000 of those nodes that have been trained, and you use an optimistic rollup, right? Where you also have nodes that question, you can go in there and question whether or not something is whether a claim was denied fairly or not fairly, or whether somebody's trying to scam the system, like you see in insurance all the time. And if the node in the rollup is calls into question another node, whoever's right gets the stake from the other one. And so that's a unique approach to dealing with something like insurance claims that I think has merit. And you can do that as a DAO, you can do that as a traditional, however you want to approach it. But those are the types of things that if I were to try to just start an insurance company right now, particularly given the amount of money involved, it almost has to be a vertical organization like we see now. And we see what happens as a result, where they do everything possible to deny claims as opposed to do it. And if you made the actual insurance contracts, depending on what it was, smart contracts with extensions that'll need to come for the actual legalese, because somebody's going to sue somebody over it. So, we'll start to see some extensions to smart contracts that leap over into the real world legal constructs, if you will. Those are the types of things that are game changers. Not cheap to do, not easy to do, not something you can do in 6 months or 1 year or 5 years. It's the type of project that'll take you 5 or 10 years to really get right. But when it happens, it's an insane game changer.
Mark, thank you so much for taking this time with us. We're huge fans of you. We'll be watching Shark Tank next season.
I appreciate that. Friday nights on ABC.
Nice. Your links are down below, but just final thoughts for the Altcoin Daily Army.
Well, let me plug one thing for the Altcoin Daily Army that's outside. I started a company called costplusdrugs.com, which is the low cost provider of generic medications today, and we're adding branded medications shortly. If you have any prescriptions at all, with or without insurance, check out costplusdrugs.com. Typically, our price is lower than your copay. So there's no tokens, no crypto. If I could add value to it with crypto, I would. It's just not there. So that's one. And number two, for crypto, business is business. The beauty of crypto is that it can make a business better. It creates new opportunities to run a business. And that's a beautiful thing. It globalizes in a way that is not easy to do with traditional business and so many other things. But there has to be a business there. There has to be utility. And don't let yourself get sucked in based off of the value of tokens and what direction they go up or down. Look at the utility and the value to you as a consumer, as a person, however you want to look at it. And where you see value, that's probably a good place to look to invest. And where you find yourself using the tokens, actually using them for something in your life, that's probably the best way. There's this old school guy named Peter Lynch, and he used to give advice on investing. And he would say, well, the way to figure out what you should look at investing is to look at what you buy and use. When you go to the mall, when you go to the store, is there one product you love and can't live without that you use every minute of every day in your life? That's a product you should probably look at the company and see if you might want to invest. Crypto is the exact same thing. If all you're doing is looking at it and saying, go up, please, when go up, when go up, when go up, right? And you find yourself all caught up in crypto speak, you're fucked, right? If you find yourself using this and thinking, oh my God, this has changed my life, I really need this. Just think back to your first, phone, think back to using certain applications. That's how, I make determinations on what crypto I invest in. Is there an application or applications that I think are game changing, world changing? Those are the tokens I want to own because I use them.
Really sage advice. Thanks, Mark.
You got it, guys. Appreciate it.